right now, we're pleased to have with us Marshall Sonenshine, Chairman of Sonenshine Partners. Marshall, thank you for being here today.
Nice to be with you, Claudia.
Will you give us a little bit of background into your company?
Sure. Sonenshine Partners is a boutique bank. We tend to operate in the upper middle market and larger size companies. A lot of boutiques are more middle to lower middle, which is where most of the demand is. We tend to skew upper middle and larger. We do mergers, restructurings, and corporate finance. And while I've worked in big banks and boutiques, I've always preferred boutiques.
Okay, let's go back to that in just a moment. But first, you really wear two hats. You also teach at Columbia. Tell us about that.
Well, that's a smaller hat. It's a once-a-week hat. I'm adjunct faculty for the last 6 years. I teach the upper level class on private equity. I've been doing it for 6 years. Monday nights, 4 to 7. And I love doing it. I have 50 students or so a semester, and it's great fun.
Well, what wonderful insight you share with your students, having someone who's in the trenches making these M&A deals across borders.
Do you think I'm in the trenches, or do you think we're flying over the mountain? What is it that we bankers actually do?
I think you're actually soaring over the mountain, hopefully.
I think you were right the first time. I think we're in the trenches.
You're in the trenches. Okay, tell us about the M&A market right now globally.
Well, look, M&A slowed down considerably in the last 5 years. We don't like to talk about that at these conferences because everybody is forward-looking. But the reality is that M&A globally was a $4 trillion market before the financial crisis in 2008, and it is a $2.25 trillion market today globally. Now, that delta from 4 to 2.25 is inconsistent with the fact that equities, stocks, have basically recovered and then some in most of the markets. Certainly in the US, we're past where we were before the financial crisis in terms of equity recovery. So M&A is a little bit dislocated, and there are reasons for that. And those reasons have a lot to do with the lack of real conviction around fundamental recovery. So M&A has slowed down, but it is still vibrant. $2.25 trillion is still a lot of deal flow. And for those of us who actually get our share of the business, is still plenty to do, but it is a smaller market than it was 5 years ago.
So I would think then that you have to be much more creative and clever when really pursuing these deals and finding these deals.
Well, I think that may be true, and that explains some of what is going on in the marketplace. The other thing that I think is true is the financial acquisition of companies has slowed down considerably. So the 25% or so of the M&A market that had been represented by financial buyouts is now about half that, kind of 12, 15%. And I think the mega deals have slowed down also. We still have some. Last year we had Verizon Vodafone, which was a $130 billion deal. And right now we've got a big $50 billion merger in Europe in cement. So we still have some, but we don't have as many. It is a more selective market, and it is a more cautious market, reflecting, because I think M&A is basically a reflection of fundamental economic and strategic dynamics around the transaction, reflecting, I think, a more cautious tone in most economies and certainly in the global economy.
I'm going to ask you a two-pronged question here. So when do you foresee this turning around, and what sort of opportunities do you think will be on the horizon?
Well, first of all, the U.S. is now leading a recovery, which is ironic, of course, because the U.S. led the financial crisis, right? But as Valéry Giscard d'Estaing, the president of France, said after World War II, we Americans have an exorbitant privilege in global economic affairs. We have the reserve currency, the dollar kind of controls, and so we can inflict a financial crisis on the world and be the first beneficiary of recovery, and I think we are. You certainly wouldn't say Europe is a beneficiary of recovery yet. It's really stuck where it is at the moment. In the periphery, it's a disaster, and in the center, it's treading water and just good enough and no better. You certainly wouldn't say China is leading a recovery because its growth is slowing right now, and you certainly can't say that Japan, which is one of the largest capitalist systems in the country, is leading anything because it remains in a recession. So the U.S. is leading. I think the shape of the recovery continues to be a U-shaped recovery. We haven't really hit the big spike yet. That said, our unemployment statistics in this country are below 7%. Our earnings are actually stronger consistently over the last few years. There's a little bit of a pullback right now, and the fears of higher interest rates, which I will admit I shared at the beginning of this global central bank priming of the pump and very reduced interest rates, those fears have not materialized, and now I don't think that they will anytime soon. I think we're in a long-term low-rate environment. That's probably good for some recovery in M&A right now. I think the formation of capital in this country is improving, and so I think we will see continued growth, not a spike, but continued good growth 10% or so a year for a couple of years in M&A. I do think we'll get back to 3 trillion. We won't necessarily get back to 4 trillion, nor do we need to.
I'd like to go back to your classroom for just a moment, so that once a week when you're in there teaching the students, what do you really hope they take away from it? And also, what were they surprised to find out?
Well, one thing that I absolutely want my students to understand is the difference between necessary and sufficient knowledge to succeed in business. I will teach in our course what I consider to be the necessary things that they need to know in order to succeed or to become private equity investors or to become part of the private equity or the M&A business. We will teach that stuff and they will get that. But I will tell them that that's not adequate. We will also teach something called business judgment and something called a view on value. What are things worth at any moment in time in an economy? That's harder to learn. Those things are much harder to learn. We really work on that. Last night we had our case on, I call it the curious case of Dell. It's one of the cases that I publish at Columbia, and it's about Dell Computer, which was one of the largest private equity deals last year. That case has everything in it, and we really unpack it from beginning to end. I love doing that. We have amazingly smart kids, the average age is about 30, they're not kids, at Columbia. But I really hope that they will learn something about the way the political world is organized, the economic world is organized, and the way business judgment is more than just being a technocrat, understanding how to value companies or how to do leverage finance or how to do a stock purchase agreement. Those are necessary but not sufficient ingredients. Yes, we teach it, but we need to teach more and we need to know more.
You know, I wonder how many of these students upon graduation are going to want to come knocking on your door and work for you.
They do, some do, but you know, Columbia has the high-class luxury. Those kids are all well employed. By the time they graduate, over 90% have good jobs. So there's not that much of that. We're a small firm, but we actually hired one last year. My TA is an associate at our firm, and we love that. So it's fun.
Great.
Yeah.
Well, Marshall, so wonderful to talk to you today. Thanks
nice
for taking
to be
time
with
out
you,
of your busy
Claudia.
day.
It's always fun. Bye.